Welcome back to the channel, everybody. This is Morpheus. Welcome back to Trade the Matrix. We're going to go over my SPX day trade plan for today, January 21st, 2026. Posted this plan right before the bell in the Discord. I'm just going to go over some of the key levels and how price reacted to it and how to um, basically decipher what's a good entry point, when to take profit, what a stop loss should look like, um, and risk versus reward. So, with that being said, this is not financial advice. I am not a financial advisor, so please do your own research. All right, let's jump right into today's video. So, key levels 68.32. 68.32, if we look back at the previous session, I'm just going to point some things out here with our little line tool. 68.32, if you look here, this is right before the bell. We were pushing up. I mentioned to the community, I don't love when we're getting impulsive move right into the bell. So when that's happening, I try to kind of wait, as late as possible to come out with the plan. But nonetheless, 68.32 is our resistance level. Okay, if you take it back all the way here, I'm just going to show you the significance to yesterday. So here was yesterday's kind of breakdown level. I was looking for 68.32 to 68, 29, 28 to hold as support. We broke down and we flushed, and the extension was around I think 67.86. We hit 67.89 off of our plan breakdown from yesterday. And then we did actually go down and test, I believe it was 67.81 pre-market. So fast forward back to today's action. So that's today's breakout level that I wanted to use to go long off of. Today's pivot level was basically 50% of the low here up to this high here. So easy way to calculate that. Take my fib tool and voila. Okay. So basically, a breakout above our 68.32 level gets us to 68.64. Obviously, there's some overhead supply over here, and then a breakdown of 67.81. Let's just flip this around here, like so. We would have been looking for about 67.50 on the downside, had we broke down. But 50% of that level, if you look here, roughly, let me get this a little bit cleaner here, is about 68.06. So that was my pivot for today. So basically, anything that was above 68.06, I was considering long to our breakout of 68.32. Anything below 68.06, I would have considered for a short down to 67.81. Okay, pretty simple there. Let's break down some of the price action and see how we could have traded this. Okay, so um, basically, we get our opening print. Um, I'm going to zoom in a little bit here. Okay, here's a 5-minute chart. But essentially, opening print, right here is our 5-minute opening candle. Okay. So, easiest way to kind of see what side of the opening print you should be on is take your rectangle tool and just draw a little box over the first, 5-minute candle. You can see whether or not you're breaking out above that opening print or obviously breaking down. We were getting some wicks off of this level here. So something that was significant that happened before the bell was this push up here. It did create a fair value gap right here. Okay. So this was something that I brought up. I was live this morning in the Discord walking people through the trades. Basically, you're getting wicks off of this significant price action here. Um, you when you're looking at this overnight, afternoon, overnight into the morning, you notice that we put in the low, kind of drift higher, and then we basically come down and break this level down, and it fails um, to yield continuation. So in my mind, and you can see there's this is a bullish order block here. Um, in my mind, this is a failed breakdown. So one of the best ways to get on the correct side of the market is to identify when you have failed breakouts and when you have failed breakdowns. When you get a failed breakdown right before the bell and then a impulsive move higher, basically traps everybody that was trying to, for example, go short, maybe swing puts at the end of yesterday's session. Okay. So it creates, a short squeeze and you get these impulsive moves into the open. And then what we're looking for is, okay, significant price action. So if 6806 is our pivot, okay, and if I have a fair value gap that essentially gaps up over that pivot, now I've got wicks coming off of our pivot and basically driving us right into our first target, which would be the breakout. Now, you've got wicks here. You've got um, long body candle, okay, closing above our bullish trigger. So, a couple different mentality as far as how you can take a trade here. You can take, wicks off of our basically pull back to support, or you can take momentum breakouts. Okay. Obviously, you're going to set your stop loss, differently according to what according to what you're taking for a trade. But on a very, I guess, minimalistic point of view, if you just follow the plan, okay, primary setup long, so entry 68.25 to 68.35 pullback, okay. Um, you're looking at a break up above here, um, pullback, and then targets 68.45, 68.50 to 68.60, 68.70. So push up into our breakout zone, pull back, wick, and then um, push up and break out of our breakout level. So I'll just point some arrows to it here. Excuse me. So obviously, resistance, right? 68.32, and breakout is basically, you know, this candle right here. Um, and then target is 68.45. So 68.45 is right about here. 68.45. Okay, that's first target 68.45, 68.50, and you can see the market basically comes to that level and consolidates after 10 a.m. and then breaks higher and starts to hit some of our upper targets. So 68.60 is here. Okay. So you're basically taking runners to the higher targets here. And if you're still in runners, there's nothing left to do. You're not entering trades, this extended from the breakout here. You're taking off, or letting runners run to, 68.70, which ends up being, so we basically hit 68, 68.74.4, if you will, almost 68.75. So this breakout here yielded, 68.32 to 68.70 ultimately. There was a thought in my mind, and I actually posted it. I had a speculative thought that I wanted to before I saw that before the market went where it did today. I had 68.81, 68.85 as an important key target for today. I did think that it was possible, if we were respecting, the 5 or the 10-minute EMA here, that you could have taken, a long to that level here. Obviously, market rolled over, and it came right back down, right to our pivot, believe it or not. So basically, long story short, very nice momentum trade to the upside, and this was done and dusted at 11 a.m. Okay, definitely could have taken a breakdown of some of these levels short, but I didn't. I basically packed it up after this, after we reached all of our upside targets, and then as we started to approach lunch, I said time to take the dogs for a walk, and came back in the afternoon. Now, came back in the afternoon and was trying to decipher. I said, what, there was a lot going on, with the economic forum and Trump speaking today. And I said, to the group, actually, I said, how many people's heads would explode if this went back and rallied to, high of day and broke out. But it wasn't that far fetched of an idea. I started to look at the chart here, and I zoomed out. I like to frame stuff on the 15-minute here. So I said to myself, this actually looks like a really nice Wycoff accumulation with a spring, and then a fair value gap, on the 15-minute. So I formulated this plan, after 12 o'clock, into this area here. I start thinking to myself, okay, we're coming down to key support. Key support is 68.06. I mean, we literally came down. We tested 68.05. We didn't even get a 15-minute candle to close under 68.06. So 68.06 is my pivot for the day, right? So unless we get below that, I'm not really getting too much more bearish. Nice pullback from the highs, but holding our pivot. And what else is significant? There's this fair value gap here. So I've seen this many times. This is a very kind of classic Wyckoff pattern. Um, and I'm thinking to myself, all right, I think this is a very good spot to go long. We have defined risk below our lows here, and I want to target the opposite side of the range. And sure enough, we did do that. So I did post on X, and I posted in my group, and I posted it on X. I said, here, let me bring it up here, so we're all on the same page. Okay, let's do this. Paste. No, not that. Stand by. Okay, copy, paste. All right. So at 12:43. Okay. let's just go back here. Right after I'm kind of recognizing that we're holding our pivot, okay, after lunch. I don't really want to take this trade during lunch. Holding our pivot, so around 12:43, around this candle here, I put this trade idea together. Okay, target targeting liquidity above us. So basically, let me just show you on a smaller time. So this is 15-minute. Let's go to the 5-minute for a second here, and I can just kind of break this down for you. All right. So chain of upside breaks, plus displacement candles. What does that mean? So you've got, break of structure. If you look here on the 5-minute, so you got change of character, you got break of structure, break of structure, break of structure. All right, you get the spring here, and then obviously rally. And on that higher time frame, you have, displacement candles. So that 15-minute candle here, okay, from the morning displaces all of these shorts. So this is an excellent risk versus reward spot to go long. So basically, I put that trade idea out there, long pullback to 68, 6,800, 68.10. So this falls within that. This fair value gap gets mitigated 50% here. It's a good spot. So go long here, and then stop below, basically stop below our lows here, and targeting 67.80 to 67.90. So the entry for this, is in here. Okay, on these pullbacks here, your stop is anywhere from 60, depending on your risk appetite. This cluster right here is actually, you know, your stop, closing below this here. Okay. And so you're basically, if you enter at, let's just say 68.10, all right, you're targeting 68, 68, 90 to 6,900, and your stop is at 67.90. So your risk versus reward here is astronomically in your favor. Okay, it's an excellent risk versus reward, and we were fortunate enough to catch the move here. We got a catalyst with some geopolitical news, and voila, the market rallied. Um, you know, basically, you're looking at about a 100-point rally off of this setup. So really sweet to have been able to recognize it and to have called it out before it happened. Very defined levels of entry, stop, target, and it was all, and it also all related back to having the plan in the morning. If I didn't have such a clear pivot of 68.06, and I didn't see price come back and kind of print a nice solid inside bullish bar here, I might not have thought twice about it. But I studied these charts, I studied these patterns many times, and I recognized it and I put it out there. So I hope that you found this helpful and educational, and I'll see you in the next one. So thanks.